Do not miss this. It is super clear what is happening. And in my videos, I break down to the point that it keeps you calm and stoic. The most important thing that you need to understand is what is happening macro and microeconomically. Let me keep it very, very, very simple for you. When somebody, whether it's a country or a person, has more debt than it has income, and it's about to print a bunch of monopoly money and lower interest rates down to almost 1%, maybe even zero, do you realize that that's not sustainable? But the reason why they might be doing this is because there's a whole new system being created, a deflationary system that is opposite of the fiat system that is collapsing around the world. This isn't in America. This is a global destruction of the fiat system to a fixed supply, deflationary assets. And I'll tell you what, the elites are not doing what you're doing. When they pump a bunch of money into this economy and your egg prices go down and your gas prices go down and taxes go down, and it's one of the greatest economies you've ever experienced in the next 36 months before Trump or the next president comes in, what's going to happen is the American public does not have the financial literacy to get into deflationary assets, protect their money, and learn how to leverage responsibly to build generational wealth. But there's one person in a family that finally draws the line in the sand, becomes more committed to the pain of change and staying the same, and works to rewire their brain. It is time to understand the cash flow quadrant, to understand the richest man in Babylon, to understand the wisdom of King Solomon. And the last thing I want you to understand, this is nothing new under the sun. All fiat systems in humanity have collapsed, but there's a slow demolition into a brand new system, and you have the opportunity to be a part of it. So let's dive in. Now, what I'm going to share with you guys is a video that Charlie Kirk was doing an interview with the Iced Coffee Hour. And I want you to really listen to what he said. We're going to have a couple videos that we're going to watch. It's going to be a little bit longer. Okay. Then we're going to go and show what Howard Lutnick posted around interest rates, where they're calling out Jerome Powell. There's so much pressure. And then the last video I'm going to show you is let me see, I think I want to get the right person, Fidelity. So Fidelity, one of the largest companies in the world around investments, is going around and talking to companies around the Bitcoin strategy. We've taken yield, man. We actually started a Bitcoin treasury for our company. We have an XRP treasury, and my family is running it like a corporation. We have our Bitcoin as our gold, and we're using XRP as our legacy changer. Okay, on the back end, I'm going to share with you exactly what I do. So first, get your pen and paper out, and let's go to school.
Your thoughts on Bitcoin?
I'm a big fan of Bitcoin.
Should the U.S. do a Bitcoin reserve?
Absolutely, yes. Yes, the United States should have a strategic Bitcoin reserve.
And who should pay for the Bitcoin reserve?
That's a good question. Hopefully, some of the tariff money could potentially do that. The reason why I think we should have a strategic Bitcoin reserve, I know you guys had Michael Saylor on your show, and I think he's onto something. There is something called like the mass adoption theory, which is over a period of time, like the English language, US dollar, things just catch on and they're just kind of volitional and there's no stopping it. I think Bitcoin is that. You got to watch out though. Quantum computing could potentially crack cryptography.
But if they do that, then they're also cracking bank accounts.
Yeah, I love what he said, because people bring that up to me all the time. If quantum computing does that, they're going to crack into the stock market, bank accounts. Everybody's at risk.
Right.
And stock trading
Yeah,
accounts.
So quantum is the only asterisk on all this. But I think Saylor is onto something very profound, which is that because Bitcoin is a legitimately scarce resource, that it's probably going to go nowhere but up. So Saylor makes a very provocative argument that Bitcoin could go up 10x over the next 10 years or something like that, which therefore, if we start a Bitcoin strategic reserve, it could pay for the national debt and like basically cover our losses on the deficit. But I think that I think the United States government should be invested in crypto.
He just nailed it. That's exactly why they're doing it. It's no secret anymore. That's why Cynthia Loomis said it'll shrink the balance sheet in half by 2045. Michael Saylor says that Bitcoin will be 13 million by 2045. It makes sense, right? It's mathematics. 5% of the supply is left. That's it. 95% of the public doesn't own Bitcoin. Then who owns it? If 80% of the supply hasn't moved and 10% of the population owns 88% of the equities, You got to wake up to what is happening. Okay. Howard Lutnick posted this. He said, we do have one of the highest central bank rates in the world. We have roaring economy, low inflation, trillions of dollars in new investments, and 88 billion in tariff revenue. Jerome Powell is a member of the expert class, which has been wrong about Trump every turn. This situation is very sad for our country. Both Powell and the board should be ashamed of themselves. And this is Trump is gangster, man. He wrote this note and signed it. And he said, we should be here, man. From 1.75 down to where Switzerland is at 1.25. And aren't they deep in cryptocurrency? Really deep. I think they're all fully tokenized. Someone comment down below. I think Switzerland is really deep into cryptocurrency. They're way ahead of us. My point behind that is, guys, it is going to rock this economy in a positive way. But remember, low interest rates, printing of money means your dollar is worthless. Okay. This is Too Late Pal. I want you to listen to this. What's her name? Caroline Levitt's, right?
And if you look at this chart, this is a chart of all of the interest rates of many countries throughout the world. At the top is Switzerland. They're only paying a quarter for interest rates. Cambodia, Japan, Denmark, Thailand, Botswana, Barbados, Taiwan, Bulgaria, Cuba, Sweden, Morocco, Cabo Verde, South Korea, Algeria, Canada, Albania, Libya, Malaysia, China, New Zealand, Trinidad and Tobago, Czechia, Bolivia, Australia, Costa Rica, the Bahamas, Kuwait, Papua New Guinea, Bosnia, United Kingdom, and the UAE are all paying lower interest rates than the United States of America, which has one of the hottest and strongest economies in the world.
Boom. Okay. So it's coming. It's coming. Jerome Powell signals openness to July U.S. interest rates. Now, I wouldn't bank on it, but by September, you're going to get lower rates. Okay. You have like everything coming to a head. China deal signed. Tariff income's going to start coming in hot and heavy. They're going to lower interest rates and boom, they're going to turn this printing machine back on. Hence why the elites are getting into Bitcoin. Hence why billionaires are now flooding into Bitcoin. Okay. It's deflationary, has a fixed supply. They're doing a controlled demolition of the fiat system. This is massive. So just in, Vice President J.D. Vance yesterday breaks the tie to past president's big, beautiful bill.
Let's vote. The yeas are 50. The nays are 50. The Senate being evenly divided, the Vice President votes in the affirmative. The bill as amended is passed.
Boom. There you go. Printing machines turning on. They are going to add a lot of debt to the system. What they're going to do is they're going to grow the economy, GDP, faster than the debt. They're going to, I believe they're going to revalue gold. They're going to put Bitcoin on the balance sheet, and they're going to rebalance the balance sheet. You have this massive appreciating asset, and you get to grab onto that rocket ship and ride it up. But you got to be very, very strategic over the next 6 years, okay? You got to be very strategic. You got to understand what is happening, and you do not want to use your newfound wealth to buy stuff. You need to get richest man in Babylon. Always take 10% of your income. Once you save it, you multiply it. You don't let it sit there. What is a bank? A bank holds water in a river, okay? They put your money in a bank. What happens when water sits? It gets stagnant. They take your money and make it current. You got to put yourself in first position. Okay, now we're going to listen to the Fidelity. So I want you to listen to this, okay? This is what they're talking to companies about in corporations. This is the head of Fidelity. I think it's corporate strategy, but listen to what he says about on Bitcoin.
All right, next up we have Chris Kuiper. He is the Director of Research for Fidelity Digital Assets, which provides enterprise-grade digital asset solutions for institutional investors. Chris contributes to and oversees the research creation process to provide leading Bitcoin.
It's going to be a little bit of a longer video, but this is the type of stuff I want you to learn so you understand what is happening at a higher level.
Education and resources to clients. Welcome, Chris.
All right, thank you everyone. Thank you for being here. Thank you to Strategy for inviting me. It is a pleasure and honor to be here today. One of the things I do at Fidelity Digital Assets on the research side is I talk to a lot of institutional investors. So money managers, fund managers, advisors, and I try to speak in their language, making the investment case for Bitcoin. So that's what I want to try to do this morning. I want to take that, but tailor it to corporations and specifically talk to corporations. To be clear, I think that you have to have the philosophical understanding and conviction in Bitcoin. You have to have the fundamentals, a lot of the stuff that Alex just talked about. But it helps to add another leg to that investment thesis stool, the investment angle. And so let's jump in right into the numbers here. I'm going to put on my CFA hat, my nerdy analyst glasses here. This is a chart that I show a lot of institutional investors.
This is important.
This is, broadly speaking, their menu of options if they're running a fund or running money. You see they've got stocks, fixed income, real assets, and then you've got your first two columns are your return. Your second two columns are what they consider to be risk. I'm going to talk a little bit about that in a second, though. And then the last two, bring those two together, risk versus return. So not surprising for a lot of people here, Bitcoin 79% annual, compound annual growth rate over the last 10 years. Now you might say 10 years, well that includes a pretty fantastic early period for Bitcoin, you would be right. But if you take the last 5 years, it's still very high, around 65%. So I'm not trying to cherry pick here. I'd rather have the 10-year picture for you here for the other things. So for example, corporations, as Alex said, they're not buying stocks. Real assets are hard. Gold, commodities, real estate, they're hard to buy, they're hard to purchase, they're hard to insure, transport. They're literally boxed in that middle box. Treasuries, maybe they can go out on the duration curve with intermediate treasuries, investment grade corporate bonds. But you see, over the last 10 years, they've only gotten about 1.3% out of those.
Super important, guys. The bond market is destroyed. So think about this. You listen to what this is what he's saying. So he's now presenting to corporations, and you're like, look what you're getting on your bonds, man. And look what Bitcoin is doing.
And that's nominal. We're going to get to real in just a second, real returns. Now, of course, the reason for this is they like the low risk, the low perceived risk. Low standard deviation, not too much of a drawdown there. But if you put the two together, which is what a good analyst should do, what return are you getting for the risk you're taking on? The Sharpe ratio shows a different story. So Sharpe ratio, as you know, is your excess return minus your risk-free rate, divided by that risk measure, standard deviation. The Sortino ratio might be a little more interesting, especially for corporations, because this takes your excess return and divides it only by the downside standard deviation. So in other words, most people don't care if Bitcoin is volatile on the way up, it's ripping higher. They care when it's crashing and going down. And I'll get to that in just a second as well. So here's your return, risk versus return. The other thing they always look at is correlation. So on the left chart there, you see the correlation of Bitcoin to major asset classes. Most people are surprised it's this low, but this is over a longer time period. At some time periods, it is very high, especially to things like stocks. But if you take a longer term view, low correlation even to things like commodities, gold, real estate, other real assets. The chart on the right is what I think is more interesting. This is very underappreciated, in my opinion, both in the Bitcoin community and certainly in the investment community. This is a histogram showing the monthly returns for the S&P 500 in blue, and then Bitcoin in orange, of course. So the S&P 500 looks like a pretty normal distribution. So on any given month, the S&P is going to go up 1% or 2%. Maybe it'll go down 1% or 2%. Bitcoin, of course, is completely inverted. It's flipped inside out. Any given month for Bitcoin, you're not going to go up or down 1% or 2%. You're going to go up a lot, or you're going to go down a lot. And this obviously talks a little bit about the correlation. So this is why it's uncorrelated. And that's, of course, the holy grail in finance. Find an uncorrelated asset to add to your mix. You can improve your risk-adjusted returns.
Yep.
William Sharpe of the Sharpe ratio that you just saw,
So what he's saying is it's an uncorrelated asset now. Trump mentioned this. Okay, stock market came collapsing down, and Bitcoin held. They're like, whoa. So let me jump on the screen here, okay? And so that's the video I showed you on Monday. Trump, they were like, uh-oh, this held. Like this is legit. People are moving into this. It's a fixed supply. The bond market is destroyed. Okay. So here's a key factor. So if you have 300 grand sitting in your bank account, okay, cash is trash. That 300 grand isn't just sitting there. They're lending it out to the next person walking in because there's no money in the system. Well, that's how banks work: interest income, fee income, and capital markets income. So your hard-earned money is being lent to the next person walking in, right? The key to understand about that is as they print more money and as they lower interest rates, your $300,000 is being devalued and devalued and devalued. And what the smart money is doing is they're taking a portion of their wealth, their cash, which is trash, fiat, and they're transmuting it into things like gold, silver, now Bitcoin that have a fixed supply. Bitcoin grows about 50% every single year. So some people are taking, this is not a suggestion, I'm saying. So if you took that 300 grand and you allocated into an asset class like Bitcoin, some into Bitcoin, I use cash value life insurance. You can use silver, you can use gold, you can use real estate. They're moving out into fixed supply assets and protection assets that not only are holding their value, okay, but you can leverage against and you can put yourself in first position. That's how the wealthy have stayed wealthy and remain wealthy. The general public uses debt to become poor, to borrow against their future self without the actual increase in income. The wealthy take their income and transmute every dollar into something that grows, that they can borrow against tax-free to buy more cash flow. Richest man in Babylon. Okay, so you want to learn to put yourself in first position. That's what I did. So when crypto went parabolic from 2020 to 2022, okay, I saw a lot of crypto influencers, a lot of people within crypto, they bought Lambos and houses and all this different stuff. I kept my lifestyle pretty much the same. Okay. What I did is we generated companies, we built companies, we focused on cash flow. We wanted to create as much cash flow as we could. So we pulled profits, we built businesses, we created cash flow. And when everybody collapsed in 2022, they panicked. We went in disciplined, methodic, dollar cost average, bought the dips when they came down. Okay. So every time cash came in, I did multiple things. So cash is trash. So I took my cash and every single day I buy deflationary assets like Bitcoin and XRP. Every single week when cash comes in from my businesses, I say, am I going to grow it into cash flow? Am I going to protect it into life insurance? Or am I going to buy a deflationary asset? Okay. I'm always moving my money. It's always current. Okay. Just like the banks, I don't dam it up. And so I get into cash generating dividends that pay me. That's my 10% of my income goes into those, which gives me my largest return and 10% of my overall wealth for risk weighting just in case it collapses. So when it comes in, I'm creating more cash flow. So I have my cash flow from the active income, passive income, and all of that goes into deflationary assets or into my premiums to create leverage. So now I have a Bitcoin bank and I have an insurance bank. So now, richest man in Babylon, the example I give you, and you can do this for anything, but you got to be very responsible when you leverage, okay? Don't leverage to buy Lambos and cars and watches. You leverage to buy what? Cash generating assets that'll pay off the leverage. That's how you build wealth. So what the American public has been taught to go to school, get a job, get paid in someone else's debt, put your money in a 401k and hope that you're going to retire with enough money to take care of your family. And what we do is we go get, since we get $100,000 a year job, okay, we have $300,000 in college debt. Okay, we can barely pay back. Then we extend it out, the loan, and then we go get a $60,000 car with a $900 car payment, and we go get a $2,700 mortgage, and then we go get an iPhone that we pay for and we rent, basically, right? And then we basically just survive to pay debt. And what the wealthy do is they take all their earned income and they transmute it into deflationary assets or into stocks or things that they can leverage, and they create cash flow. And that's what we have to learn to do. So if you're in cryptocurrency and you get a large amount of wealth in a short amount of time coming up here in the near future, you got to play a different game, guys. You got to play a different game. Okay. All the fun stuff will come. Like, I am going to get a wake boat by next year. I could have bought it 2022. I could have bought it 2023. I could have bought it in 2024. I could buy it right now. I could buy the wake boat. I want to be out on the lake during the summer. I live in Arizona. I'm super excited to get it for my family. We love being out on the lake, but damn well, I'm not going to spend $2,000 a month of our family's money that could be put into deflationary assets or cash flowing assets. What I'm going to do is when the bull run hits, boom, we pull, max fund the policies first, get the family bank bigger. Okay. Then if I want a $150,000 wake boat, I'll take the $150,000, I'll put it into a cash generating dividend or into a cash value life insurance policy. I'll borrow from the policy at 5%, Buy the dividend and let the dividend pay off the boat as soon as possible within the first 10 months. It's paid off. Boom. Now I have a cash generating dividend over here, and I'm driving a retirement policy. You don't buy liabilities with your family's wealth. You buy it with OPM. Okay. You buy it with assets. So that takes discipline. That takes patience. It takes growing up as a man and being like, listen, I want that, but that's going to hurt my family. That's what you should always think. Every decision you make, men, you're going to buy that four-wheeler or that new boat or that new truck. You should think, is this going to add to my family's wealth or take away from my family's wealth? And if the answer is take away, you need to stop and you need to say, okay, I'm going to figure out a way to increase my cash flow. Take that cash flow, put it into an asset that will appreciate. When I borrow from that asset, it'll appreciate. I'll create cash flow that'll pay for the asset or the liability, excuse me. You don't buy liabilities with your family's future. Okay, we got to get disciplined. We got to get focused. Like I'm telling you, this is why in 2020, I drew a line in the sand because I kept going broke. I had no problem making money. I've always had the ability to get back up and win again, but my brain was not wired for wealth. I was never taught how to balance a checkbook. I was never taught about assets. I was never taught about liabilities. I was never taught about investments. I was taught that you go to school and you get a good job and you get your 401k and you try to get a pension and your health insurance. That's the American trap. It's not the American dream. That is not going to work anymore. It's not going to work anymore. Our grandparents' economy and our parents' economy will not work anymore. And I'm telling you, by 2030, the middle class is going to get wiped out, leverage towards technology, moving down to the working poor. If they don't wake up and get this newfound wealth that's going to come into their pocket because taxes are going to be lower, prices are going to be lower. Okay. There's going to be a lot more money in your pocket, and that money should not buy stuff. It should buy assets to enhance your family's future wealth. Okay. It just takes discipline. We're very undisciplined in America. Okay. We don't suffer anymore, especially men. We don't suffer with purpose. If you ask 100 men what their purpose is, they're like, to make money, to feed my family. No, your purpose is a higher power, source, God, family. Protect your ecosystem at all costs and stay out of other men's business who are too busy working on it. And every decision should be based on a principle model. What are your principles? How do you make your decisions? Like if I asked you, what are your principles? Mine are integrity, honesty, uncompromising belief in God for business. A family, it's peace, freedom, and family structure. My creed is God, family, protect your ecosystem at all costs and stay out of other men's business. I'm too busy working on mine. That is my foundation. That's how my decisions are made. That's how my investments are made. That's what we need to get back to, men, the core or head of household. So I love you guys. I appreciate you very, very much. If you need any support at all, down below in the description of this video, we have tons of resources, or click the social media platform. You'll click the link, the hyperlink in there. So I have my insurance team, my elite insurance team, that's specifically around cash value life insurance. Okay. That's not around digital assets or cryptocurrency education. That is specifically, I have an elite team that teaches people how to properly structure these policies and properly fund the policies to use them how we use them. Okay. That is a free consultation with that's my insurance company. I have an elite team in all 50 states. And then I have the Warrior Academy. We have 11,500 people we've helped since 2020. You can discover that and surf around there. And I think that's all I got for you guys right now. That's it. I love you guys. Warriors. Let's get your shit together. God bless you.